This is week 11 of investing every week in the stock market. I started this series to document my journey in the stock market and in the hopes that other people might start investing as well or stay consistent with their investing. If you want to follow along, please smash the like button and the subscribe button. This week we have around $1,000 to invest plus some money left over from dividends that I received throughout the previous month. My first buy as always is going to be in the S&P 500. In my opinion, I'm just a humble guy that invests. This is the best instrument for any individual investor. The S&P 500 are 500 of the biggest companies in the United States of America. Tech, banking, financials, consumer defensive, any industry that you can imagine is included in the S&P 500. The past year, as you can see, this ETF, VFE, is up 34%. I don't recommend VFE. You can choose any ETF that you like. WU is a popular one, SPY is a popular one. There's just so many to choose from. But every week, I invest some money in the S&P 500 because I appreciate its 10% annualized return for the last 40 years. So I'm going to go ahead and buy 2 shares of the S&P 500, queue the order, and done. My next buy is going to be in the NASDAQ 100. Similarly to the S&P 500, this is an American index tracking 100 of the biggest companies in the United States of America. Just a disclaimer that this ETF is extremely tech focused since it just so happens that the biggest companies are tech companies. If you think in the future tech is not going to create value, this might not be the ETF for you, but I think for myself, just looking around me, everything that I do, everything that I own has a lot of technologies integrated into it. If you look at this laptop, this camera, this microphone, my phone, and not just current devices, but future industries are also tech leaning. For example, AI and data. So I think the NASDAQ 100 aligns with my goals and what I think is going to add value in the future. So I'm going to go ahead and buy 1 share of the NASDAQ 100, queue the order, and done. My next buy is going to be in a leveraged S&P 500 ETF. Through this ETF called USSL. What is leverage? Leverage is an instrument that adds on to your returns. This ETF is 25% leverage, which basically means whatever the returns of the S&P 500, I'm going to get 25% added on. For example, if the S&P 500 goes up by 10% every year, this ETF is going to go up by 12.5%, minus some leverage costs in terms of interest that the ETF provider has to pay. The opposite is also true though. If the S&P 500 goes down 10%, this ETF is going to go down 12.5% plus leverage costs. You can see the pros and cons here, but for a long-term investor like myself, I think this modest leverage is going to add on to my returns 10, 20, or even 30 years from now. So I'm going to go ahead and buy 3 shares of USSL, queue the order, and done. My next buy is going to be in a leveraged NASDAQ 100 ETF through this ETF called QQQL. Similar concept as USSL, add 25% leverage onto the returns of the NASDAQ, hold on for the long term, 20 years or 30 years from now, and withdraw a ton of money when I retire. So 2 shares of QQQL, queue the order, and done. My next buy is going to be in a leverage all equity ETF. Leverage we've covered before. What does all equity mean? It basically means that this ETF, ATQL, holds not just the US market and the Canadian market, it also has some international exposure. Something you might have noticed is that I love the US market, which I do, but I do think some international exposure is good, just in case developing markets or other developed markets see a nice recovery in stock indices. So I'm going to buy 4 shares of HEQL, queue the order, and done. My next buy is going to be in the Canadian market, the home of Maple, not home of the handsome Prime Minister anymore, unfortunately, but I want to invest in the Canadian economy since I do believe some Canadian industries like the banking industry, insurance industry, telecom industry are always going to be there because we love oligopolies in this country. This ETF has gone up in price actually, giving me a return of 15% for the year, but it also has a nice dividend yield at around 4.2 to 4.5%, adding on to the total return. The thesis is to participate in the Canadian economy through growth, but also some nice dividends. So I'm going to go ahead and buy 3 shares of BDY, queue the order, and done. My next buy is going to be in Fortinet. Fortinet is a cybersecurity company that provides a whole suite of products from firewalls to threat protection services. They have all your bases covered for cybersecurity. The revenue growth rate has been impressive over the last 4 years, but why I like Fortinet in particular is because of their profitability. Balancing revenue and profit is the key when it comes to any tech company, particularly any software as a service company, and I think Fortinet has found that balance, which is why I'm going to go ahead and buy 1 share of Fortinet, queue the order, and done. My next buy is going to be in a leveraged covered call ETF through this ETF called HYLD. Leverage we've covered before, but what is a covered call ETF? Essentially, covered calls are an option strategy that sacrifice some long-term potential growth to give you income now. As you'll notice, I'm only investing $42 in this because I think for a long-term investor like myself, a growth-focused approach with ETFs like the S&P 500 and the NASDAQ 100 will yield better returns. But the motivation factor of seeing dividends pile in every month is something that I cannot deny, at least for myself. So I'm gonna go ahead and buy 3 shares, only $42 worth, so I can keep that dividend snowball rolling that keeps me motivated to invest in the stock market. 3 shares of HYLD, to the order, and done. My next buy is going to be in QQCL. Just like HYLD, this is also a covered call ETF, this time tracking the NASDAQ 100. If you look at my portfolio, the biggest 3 indices I invest in are the S&P 500, the NASDAQ 100, and the TSX 60, which is the Canadian version of the S&P 500. I just use these covered call ETFs in complement to those major indices. This index tracks the NASDAQ 100, and much like with HYLD, not a lot of money invested, just enough to keep that dividend snowball rolling. So I'm going to go ahead and buy 1 share of QQCL, queue the order, and done. So that's it. Those were all my buys for this week. Let me know what you bought in the comments below. If you agree with my strategy, if you think this is the worst strategy of all time, I want to know your thoughts either way. And as always, if you enjoyed this video, don't forget to smash the like button and the subscribe button. I'll see you next week.